New Fed chair. Kevin Warsh called inflation a choice and vowed zero tolerance. Then June CPI printed at 3.5% and markets flipped hard. Rate hold odds jumped to 86% on the CME Fed Watch tool. Hawkish words, softer data, the dollar didn't know which way to break. Stick with me. By the end, you'll know the single currency pair most exposed here and the actionable way to think about playing it. Warsh pulls the dollar two ways. His inflation-fighting tone is hawkish, but the CPI reaction was dovish, pricing out a near-term hike. So the immediate move favored a softer dollar. The DXY slipped as hike odds faded and short-end treasury yields eased, but he kept optionality open, refusing to reveal the rate path. You can't fully fade the dollar. A hot inflation print revives hikes fast. EUR-USD is the cleanest, softer dollar play. The euro grinds higher, but the ECB's own easing bias caps it. Expect a choppy climb. USD-JPY is the most rate-sensitive major. Falling US yields compress the carry that powered it for years. Dovish repricing pushes it lower. But intervention risk and Bank of Japan caution keep the tape two-way, stalling rallies near key levels. And the currency everyone's watching? That reveal is coming. Hang on. Sterling and the Aussie rally when the dollar softens and risk improves. But an energy shortage complicates things for oil importers. Winners? Short dollar, long euro traders on a confirmed hold. Yen short sitting on fat carry face squeeze risk and may trim. A quieter Fed helps emerging markets. Lower US yields ease their debt burden. Gold and silver gain as real yields drift lower. The bigger deal isn't the rate call, it's the communication shift. Warsh wants less forward guidance. The market loses its crutch, so data becomes the catalyst. Every CPI, payrolls, and PCE print moves pairs harder because there are fewer official signals between meetings. Think of it as a compressed spring. The dollar isn't collapsing. Upside momentum stalled. A hot surprise snaps it back to strength. The caveats matter. One CPI print isn't a trend. Energy could reignite inflation, and crowded short dollar positioning invites a squeeze. So here's the reveal. The pair most exposed is USD-JPY, the most rate-sensitive major directly geared to that fading US carry. The actionable read, fade extreme moves rather than chase, while respecting intervention zones. Keep stops tight, a quieter Fed amplifies day-to-day swings. The caveat stays, intervention and a hot inflation print can snap the yen the other way. This is analysis, not a signal. Bottom line, hawkish words, soft data, opaque communication. Expect a two-way headline-driven dollar, not a clean trend. Size accordingly. Read the full analysis on edge-forex.com. Link is in the description.